The last 30 years in May, the stock market's up 1.35%. Sell in May doesn't work. Think about that. So the whole sell in May, go away is bogus. Do you guys know what sell in May and go away means? Somebody explain to me what sell in May and go away means. Thank you, Eric. But you were actually just in the chat room, so. Do you know what sell in May and go away is? Sell in May, go away for the summer. Oh, he said, no, I'm away from my PC. That's right. That's because it means, yeah, the market's, I got to tweet this. Sell in May and go away does not mean the month of May performance. If you have been in the markets long enough, it means not long through summer. It actually means do not be long through the summer months. The markets tend to peak from April to June-ish. That, anybody who doesn't know that and is just looking at May, the May performance, means that they're very short-sighted and they're not actually looking at the big picture. The sell in May, go away means I'm selling in May and I'm going to be gone for the summer months because everybody's going to be on vacation, everybody's going to post tax season, everybody's going to sell their stocks and be gone. That's what it means. It means that we tend to peak around April to June. Again, I'll just show you the chart. I don't. Where did you guys find the cyclical crap? Where is that button? I don't know where the button is. Anyway, I have to figure where is that? Below the ciphers here. So if I go to, is that it? Bottom of the right here? In pattern. Oh, okay. In patterns. Wait. Side. There we go. Now, so if I put in, let's try that. Let's go to, oh, look at that. Now where's May? Here, I'm just doing it like right here. April 25th, 26th, something like that. Something like that. Oh, that's kind of cool. So you can see, like the market, tends to find peaks around the summertime. Okay, that's all sell in May, go away is. I mean, if you look, so So one of the guys in the chat room was like, well, May is up 1.35% on the year on average, for the last 30 years. Well, guys, if you run up the beginning of May 2%, and then you sell off a 0.5% at the end of May, but it's the start of a 4 or 5% decline. Yeah, I mean, May you might be up 1%, but if it's the start of the decline for the summer, then go see what it's like for the rest of the summer. I would venture to guess that the rest of the market is down. Does does that make sense? So if you think from a cycle standpoint, you want to start getting long in August, September, and then try to ride out the market throughout the end of the year and through the quote unquote Christmas Santa Claus rally. You know, so if you want to be long risk, you want to be long risk, in early fall. So anyway, hope that helps. Having this conversation. This is cool. Thanks, guys, for the cycle patterns. That's nice. I'm going to remove that. That makes life a whole lot easier, I'll tell you. Okay, you know what we have to do? We have to get we have to get started on our analysis, because I really don't care what's going to happen over the next couple of weeks. I'm more concerned with what's happening today. So let's take a look at the euro dollar. All right, here's the euro, and let's get started for today. All right. So the euro dollar is back at the 618. I am and still hold a euro dollar short position. My cost average is 133.39 is where my cost average is. I'm still short. It's been bouncing around. It's actually holding support really well. You can see the support right through here, which comes in at 113.50. And we're going to have to, this is a really tight trading range. I mean, if you look at the euro dollar 30 pip trading range today, I mean, that's tight. Our average daily range right now is what, 80, almost 90 pips. So we're less than half of its average daily trading range. It means that we can still move, whether it's highs or lows. I wouldn't be surprised to see us break through highs. That's not what I wanted. I would not be surprised to see us break through highs here and push towards 114. That would make sense to me. And actually 114.15, it seems like the next logical resistance, which is a 7.86% retracement. Okay. So 114.15 is resistance. And support is 113.50. If we break below 113.50, which will be lows of the day, then I think you're going to start to see a little bit of a pullback in the euro. But the euro's been strong. I mean, I've been less than impressed with the dollar. I mean, obviously the dollar index, this has been very frustrating for me because I am long the dollar, against certain currencies, and this dollar has had very, very shallow bounces. I mean, you take currencies like, the euro dollar that's come screaming back towards, 114. You got the Swedish krona that slipped back through 806. It's like, man, these things are having a really, really tough time moving anywhere. Fortunately, these commodity currencies aren't doing all that great, but it's like, the dollar's just been, it's like, what a piece of garbage. But I think a lot of that also has to do with precious metals. Precious metals are extremely strong. As you guys know, silver just continues to break out. Gold's holding up all right, but I mean, not in comparison to silver. Commodities are relatively strong. Crude oil is pretty well bid. Copper is well bid. So anyway, that's what's leading to a lot of this, lot of the dollar weakness right now. The cable. So the pound dollar stopped yesterday on a dime. I mean, it hit our triangle resistance. We wrote down 144.15 yesterday, I think. But the 127% extension was 144.17. We hit 144.18. So you can see today we came right up towards that resistance again, and because of the weak employment data, it pushed us back down. But the pound's actually holding up pretty well, considering how weak the employment data was. That what that tells me is that this is really critical resistance for the cable. Really critical resistance for the cable is 144.20. Okay, we're still in our range unless we break out of that, unless we break out of the 144.20 level. But like I said, the employment data is not leading us to believe that that is actually going to happen. Okay, support, we'll just take the overnight low, which will be 143.50. Very tight ranges today. 143.50 will be support. Let's go take a look at the Swissy. The Swissy probed below 96 cents yesterday, and it hit the 50% retracement. You can see the 50% retracement. This flag pattern is really not a flag pattern. It never pushed above the upper trend line. So unfortunately, it didn't play out like a flag, but we back tested a 50% retracement. Previous resistance, that's acting as support, so we're going to take that spike low yesterday, which is 95.85. And really, in order to turn the Swissy higher, we really have to take out 96.90. I mean, I know it's 96.88 or something like that. What is the high here? 96. 96.88, but 96.90 really has to be taken out. You know, resistance, we'll probably find resistance back up 96.50. 96.50 has been a big pivot. Anyway, all right. Let's go over to the yen. All right, so here's the yen. We have, in the yen, we have what might be, and I drew this out in blue last night or yesterday, what might be a triangle pattern, which actually is not going to be good if you're bullish. I mean, if you're bullish and all we're doing is consolidating down here at the lower end of our range, that's not a good sign. Okay, it's not a good sign for bulls. That we haven't had any major recovery here. Now, what we're seeing as far as right now goes is we're seeing this tight consolidation at lower levels. And I guess as long as the 109.50 level holds, that puts us a risk back for a move back towards 108. Now, I'm not saying that we're going to go to 108 today, but what I would be looking for is, you know, this support right here. If that breaks, then, you know, we're heading back down towards the lower end of this range. So I'm going to say 109.50 and then 108.75. 109. Oh, whoops. 108.75. Sorry, just trying to cruise through some of this analysis. 109.50, and we are in a bearish trend. Okay. Let's go over the Canadian. The Canadian. What a dog. I mean, I'm long the Canadian at 126.50. I bought it yesterday at 126.50, like literally right here. I mean, we rallied back. We couldn't even take out this resistance. Now, this all happened overnight. I knew I was in Asian trade last night. We were sitting at 127.20 when I went to bed. We were right here when I went to bed, and I was thinking, I should probably just take some profits off the table last night. And, you know, whatever you see in Asia tends to get reversed. If you don't know that, it's a pretty big known. And I sat there last night and I said, yeah, I should probably take it off the table. But then I'm thinking, well, what if this is that time? You know, this is that time that they actually plow them from after Asia, and they take it through the rest of the market, you know, into Europe, and of course they didn't. So but I don't live in the, shoulda, woulda, coulda world. I mean, I didn't pull profits there. But one of the things that got me to buy the Canadian yesterday, first and foremost, is the big 38% retracement on a monthly and weekly basis. And that comes in at 126.71. That's where we're at right now. Well, we're slightly below it. But, this is big support here. So what I expect to happen with the dollar Canadian at this stage in the game is for us to bounce around a lot down here. Okay. Now, that means that we could hit new lows, but it'll probably be very marginal new lows, maybe take us down to 126. And we're probably going to end up bouncing around here quite a bit. All right, so resistance right now, to take some of the downside pressure off, we have to get back above 127.40. Okay, 127.40. All right, it is in a bearish trend, and support, I'm going to write down 126 because I actually believe that new lows can be taken out today. And yes, I'm long. Obviously that wouldn't help me at all if that happened, but I think 126 is very doable today. Okay, 126.03 is 127% extension. Like I said, the market's weak enough in the dollar Canadian where, to me, it looks like we can take out new lows and push stops below those lows. So I think 126 is going to be pretty key support. Okay. Let's take a look at the Kiwi. So the Kiwi has rejected the 70.50. Now this is a channel resistance, by the way. Okay. Do we have an ascending wedge? Somebody asked me yesterday if we have an ascending wedge, and I said it's possible. But I said if we break, the lower end of this, the lower trend line here, all it's going to do is take us down to channel support. So, but you can see there's a lot of fibs, 161% extension right here that takes us basically to where we're at right now, 70.30, 127% extension of this move. And really, I think channel resistance is big. So 70.50 is going to be pretty big resistance today, in my opinion. 70.50. That's going to be pretty key resistance for the Kiwi. Now support on 69.30. This is big resistance on the way up. It's going to be big support on the way back down. So that's 69.65. 69.65. I think that's going to be very important support. If you guys want to get long the Aussie or the Kiwi, excuse me, I think that's the place to do it. You want to buy dips like this. If you want to get long, you buy dips down here. I don't think you want to buy it up here as you're, challenging some of this resistance. And it is bullish right now. It switched to bullish yesterday because of the breakout of, finally we cleared all this resistance up here. We're now starting to show a solid breakout above the 69-cent level. And frankly, I think as long as we stay above this resistance here, I'm going to go ahead and put this in as a horizontal line. Okay, see that there? See that there, right there? That one right there? Okay. As long as we stay above that yellow line, we're bullish, because we had a false breakout and we tried to rally again, couldn't rally above that resistance. I was a little nervous. But now that we're holding well above, we finally broke out, we're holding above that yellow line. As long as we stay above it, we're bullish. And we get back below it, we'll probably switch back to neutral. But that's the bull, what I would call the bull-bear line in the sand, okay? Meaning that as long as we stay above 69 cents, it's bullish, okay? Let's go get some coffee. That's what I'm thinking. I'll be back in a few minutes. Thanks, everybody, for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Hold on one second, really quick. All right. Let's go ahead and, one of the things that I just noticed a few moments ago is the Euro Swiss. It's breaking one of the higher levels that we haven't seen in quite some time. Actually, over the course of the last couple of weeks, we're starting to break higher out of this little triangle. Just because I'm long some dollar Swiss, so I was just paying close attention to that the Swissy is actually starting to peek its head up a little bit. All right, but anyway, we're going to get back to our analysis. We've still got to finish up with the Aussie, so let's get over there. All right, so here's the Aussie dollar, and if you're looking at the Aussie right now, what I'm I'm starting to get to a point where, and I know I mentioned it a little bit earlier, the Aussie is becoming more and more attractive for me to be on the short side. I've been very reluctant to be short the Aussie dollar in recent months. I've been playing the Aussie on the long side through the Aussie New Zealand. I've played the Aussie dollar itself long, sporadically here and there, because it's been moving up in a choppy fashion. But if you look at the descending trend line that comes into play, it really intersects around 80 cents. And obviously, because I've said this over the last couple of months, any move towards 80 cents is, to me, one of those areas that I'm obviously wanting to sell the Aussie if we can get up there. The question is, are we going to get up there? I mean, we have a lot of bullish momentum right now. Precious metals are really well bid. You got the tailwind from stronger crude oil prices, but at the same time, as I mentioned earlier, sentiment in the Aussie is getting a little too optimistic. And so because of that, I'm a little skeptical about the current move that we have in the Aussie. But that doesn't mean I necessarily want to start shorting it yet. Okay, the Aussie has further resistance that takes us up to the 161% extension, which is 78.66. But if you look at the 786 retracement, it also coincides with the same number. It's actually just 10 pips higher. It's 78.77. So in other words, if we can make a move to 78.77, here, actually I removed the wrong line here. Let me move that really quick. If we can make a move to 78.75, I think that's going to be a pretty nice area to pick off the Aussie today. There's your resistance. I think that's going to be a pretty key resistance. We are still bullish, still in a bullish trend, and to take any downside pressure, or excuse me, upside pressure off of the Aussie, we're going to have to come back down and take out that 77.20, which was the breakout point. So while we're above 77.20, I mean, this thing's, you got to be really careful, being on the short side. A lot of the way I would look at this is, if you decide to get short, like if you find an area where you go, well, like let's say we make it up to 78.75. I don't think you want to plow in like a full size position. It's probably one of those things where you try to pick off a little bit, take a small short, and if we dip back below 77.20, you can always add. If you're trying to trade counter trend, I mean, that's the way I would approach it. If I'm going to try to lay into some Aussie, it's going to be up there. I still have some Aussie shorts with the, well, actually I take that back, because I got the I cleared out my pound Aussie longs yesterday, which fortunately I did. I think I took it off for a very, very small loss yesterday afternoon, late afternoon. But anyway, you want to sell into some Aussie strength, I think up there is the place to do it. Let's take a look at the dollar index. Okay, so here's the dollar index getting a little bit of a bounce. We're sitting on, and we bounced off the 786 retracement yesterday. You can see it here. I'm obviously being long some dollars right now. I'm bummed out that we've come this far down, but at the same time, if we can create a higher low on the daily chart, that'd be a very important development to me. Being on the long side the last few days. So we've had the 786 retracement, that's holding. So the dollar index, that low comes in. We're going to take yesterday's low, which will be 93.92. So I'm going to write down 93.90 as support. That's going to be key support. I think if we give back that level, the chances of us getting down to the chances of us getting back down towards 90, 92.50 is probably fairly realistic, which is the major breakout point from like 2004, 2005. But 93.90, that'll be pretty key support because that's lows from yesterday. Resistance right now, let me go take a look at the hourlies. Okay, previous support right here was going to be 94.25. So to take this downside pressure off, 94, gosh, that's not too far away. This has been a really shallow bounce for the dollar as it is. But 94.25 is going to have to be taken out to turn bullish here. Okay, we're just going to be we're at the lower end of our range, but we're just going to keep it in a range. Let's go take a look at the peso. And now the peso is actually holding up relatively well. We caught a bid yesterday, and you know, we have this Gartley pattern that you can see here. Nice little Gartley is formed. Resistance comes in. It's going to be yesterday's highs, and the reason why I say that is because if we take out yesterday's highs, the peso, for those of you that don't know, the peso is a really good barometer of risk appetite and risk aversion. So if we start taking out yesterday's highs, that to me suggests that the equity markets are probably going to come under a little bit of pressure. So that's why I think we have to pay really close attention to the yesterday's highs, because that would mean that we're probably going to start looking like we're going to break down, at least in the S&P. So yesterday's highs came in at 1737. Support's going to be yesterday's lows, which comes in at 1722. I guess that is 2292. So 1723. So this break below here, the yesterday's lows, and or above, there's the lows right there. A break above the highs or a break below those lows, they'll help us really identify risk appetite, continued risk appetite, or risk aversion. Because if we break through those lows, yesterday's lows, that probably is telling us that the S&P is gunning for 2110, which on the S&P futures, 2110 is a fairly significant level, which we'll go take a look at here in a minute. But if we break above 1737, then that tells us that maybe some risk aversion is seeping its way into the market. So again, if you guys trade equities and you don't watch the peso, I would highly advise that is something that is on your front burner, something that it's a chart that you keep on your screen, because it is such a great barometer at this point in time for risk on, risk off, through the currency markets, through the viewpoint of the currency market. Okay, so support 1723, resistance 1737, and we are the reason. And I know a lot of you guys go, man, why isn't this in a bearish trend? We're really in more of a range environment. We've been in an extremely bullish trend for, you know, the last couple of years, and as you guys know, I'm going to be a very aggressive U.S. dollar seller, Mexican peso buyer, if we can make it back towards 1850. You know, right now I happen to be long, you know, at 1760, so I'm underwater right now, but I am looking for a rally in the near term in the peso, the U.S. dollar Mexican peso, and then I'm going to look for a sell-off hopefully in the next few months, because I really think these emerging market currencies, and I know I've said this a lot over the last couple months, I really think these emerging market currencies have bottomed, but that doesn't mean that we won't have any more weakness. I think you know, if the market becomes a little risk averse, the emerging market currencies will come under pressure, but that downside pressure, if we get back to 1850 or so on the U.S. dollar Mexican peso, that's going to be a great short. Also, for those of you that are looking to buy some, you know, some property in Mexico, yeah, if the U.S. dollar Mexican peso gets up above 18 again, you might want to start getting those that paperwork ready with your real estate agents. Wink, wink, hint, hint. Okay, let's take a look at the Norwegian krona. Now, the krona, we found support at the channel lows yesterday. So if you go over to the daily chart, you can see we found channel lows, well, actually a couple of days ago, last week. We hit new trend lows yesterday after the, reversal from the Doha meeting, and, crude reversed, and U.S. dollar, Norwegian krona, like the Mexican peso, came back under pressure. We hit very brief new lows, but there's been little follow through, which, if you're on the short side of the US dollar and Norwegian krona, you're probably scratching your head and maybe even a little nervous about what, the potential outcome of here may be. So what I'm going to do is I'm going to actually take this, see this trend line. I always adjust trend lines because I obviously won't draw them perfectly the first time around. It never quite works that way, so I always make slight adjustments from time to time, thinking, okay, this is what the market's probably looking at. So I'm going to make that adjustment right now. That channel I still think is there, but I think that the channel lows come in just below where we're at, maybe 807 or so. So even if we make a new low in the US dollar Norwegian krona, 807 should stall any downside moves. Because this channel's been fairly significant. If you look at the number of touches that we've been there, and that coincides obviously with the upper end of this, the upper end of this this range as well. So, or this channel. Now, resistance to take off the downside pressure is above 830. Period. End of story. So that is key resistance, 8.3000. We are, I always waffle between putting in a bearish trend or a range, because if you go over to the weekly chart, this has just been a very bullish move over the course of the last couple of years. But I should probably keep it in a bearish trend, and I know I waffle back and forth, but just be careful being on the short side while you're at the lower end of its range. Actually, you know what? I'm just going to put it in a range. Just while we're at the lower end of this channel, just be careful being on the short side. I'd rather be on the short side of the US dollar Norwegian krona up at 840, not down here at 810. I'd rather be short up here, not short down here. I'm not saying we're going to go up there, but if we go up there, that'd be a much better place to be on the short side, not where we're at right now. So if you grab this resistance, it'd be over here. Okay, now last but not least, let's take a look at the Swedish krona. Swedish krona has been extremely weak today. There has been no economic data at all, so we're coming right back down towards major support. And by the way, I'm still long the U.S. dollar Swedish krona. I'm long at 808 right now, and that's my cost average. Obviously, it's come back down under pressure. We're coming close to major support, which comes in at 803, which we tagged the other day. Remember, when we tagged that, we rejected and bounced really quickly. I don't know if we're going to get that this time around, but we have to be on guard as we approach 803, because if we break through 803, I'm going to be very nervous about being long the dollar if that happens. This is major support. Okay, resistance is still at 818. Okay, and we are in a range for right now. We're just at the lower end of that range. Okay, let's now your bias chart is done. Let me see if I can take some questions really quick. I'm going way back here.